Ladies and gentlemen, good day and welcome to Krsnaa Diagnostics Limited 2Q FY23 and 1H FY23 earnings conference call hosted by Equirus Securities. We have with us from the management Mr. Rajendra Mutha, Chairman and Whole-Time Director, Mr. Yash Mutha, Whole-Time Director, and Mr. Pawan Daga, Chief Financial Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Yash Mutha. Thank you, and over to you, sir.
Good afternoon, everyone, and welcome to Q2 FY 2023 results conference call of Krsnaa Diagnostics Limited. And thank you everyone for joining us today. We have already circulated our earnings presentation, which is available on our website as well as the stock exchange's website. I hope you all have had the opportunity to go through the presentation. From an industry perspective, the need for high quality and affordable diagnostic services are clearly visible, as it is an integral part of our healthcare industry, which plays an imperative role in diagnosis, assessing disease, and plays a major role in the treatment, management, and even prevention of diseases. Today, the Indian diagnostics market is valued at $10 billion and projected to a CAGR growth of 14% in the next 5 years. The key fundamental drivers of the diagnostic industry, such as large population of 1.3 billion people, rising per capita income, allowing increased affordability and need to access better healthcare services, emergence of lifestyle diseases, and increased awareness of preventive health checkups. Overall, looking at India's demographics, there is a vast and underpenetrated market of diagnostic services which offers an immense opportunity to both organized and the unorganized players. Furthermore, recognizing the importance of making diagnostic services affordable, the government and various states are continuously evaluating public-private partnerships as a viable and best alternative to provide high-quality diagnostic services at affordable rates to the masses. Today, Krsnaa Diagnostics is a leader in the public-private partnership diagnostic space, and we're proud to have expanded our presence in the last 5 years, making high-quality diagnostic services affordable and available to the remotest corners in the country. We are well positioned to serve our patients, and we see tremendous runway ahead to build upon our solid foundation. With this backdrop, I am pleased to inform that in line of setting up new centers, in the state of Himachal Pradesh, the company has operationalized 10 pathology labs out of the 24 and 126 collection centers out of the 190. In the state of Maharashtra, the company has fully operationalized its diagnostic centers at K.D. Somaiya Hospital and Research Center Sion, Mumbai, and at Pandit Madan Mohan Malviya Shatabdi Hospital in Govandi, Mumbai. In the state of Punjab, as per the agreement with the government for procurement, operation and maintenance of 25 CT scanners, 6 new MRI machines, 30 pathological labs, 1 referral laboratory and 95 collection centers across the state, the company has operationalized diagnostic centers at 2 more locations, that is Mansa and Sri Muktar Sahib. With this, the company has now operationalized 20 CT scanners, 5 MRI machines, 18 pathology labs, including 1 referral labs, and 95 collection centers in the state of Punjab, which amounts to completion of almost 88% of the project as on date. We are progressively expanding our presence, and during the quarter, we've added 7 radiology, 50 telereporting, 20 pathology labs, and 116 collection centers. As of today, Krsnaa is a leading PPP diagnostic player with 120 radiology centers, 1,489 telereporting centers, 72 processing labs, and 677 pathology collection centers. The implementation of the remaining centers is on track, However, there have been some regulatory and procedural delays in operationalizing these centers. We expect all the centers mentioned in the RHP to be operationalized by the end of the third quarter of the current fiscal. Coming to the financial performance during the quarter, during the second quarter, Krsnaa registered core revenues of rupees 123 crores, a growth of 19% year-on-year, despite of the high base in Q2 FY22 due to the second wave of COVID-19, and 9% on a sequential basis. The COVID-19 revenues declined from rupees 5 crores in Q2 FY22 to rupees 0.3 crores in Q2 FY23. Krsnaa continues to grow its core revenues with a focused approach. Our EBITDA stood at rupees 31 crore with margins of 25.2% and net profit of 15 crores with margins of 12.5%. Compared to previous quarters, which saw an impact on margins, our margins for this quarter have stabilized with increased contribution from newly launched centers and therefore giving us confidence that our margins are expected to improve in the upcoming quarters with the maturity of newly launched centers. On the B2C side of the business, we are pleased to announce that we have decided to enter deep markets through a franchisee model and plan to launch 600 collection centers across India, providing services at attractive rates. The company will strengthen its footprint across Maharashtra, Himachal Pradesh, Punjab, West Bengal, and Rajasthan in a phased manner with a spread across metros, Tier 2 and Tier 3 cities. The centers will be equipped to offer specialized services in genetics, genomics, and molecular diagnostics, along with routine investigations of biochemistry, serology, and histopathology. The centers will offer dedicated services to women's health, including hormones, PCOD, as well as diabetes monitoring, cardiac health, and cancer care. With this expansion, the company will be providing premium quality diagnostic services to patients, which will be accessible to them at highly attractive rates. On the technology front, they're also implementing the latest CRM from one of the leading vendors, which will help us create efficient automated business processes to increase productivity, provide the team with relevant data points to enhance customer engagement with an overall aim to improve customer experience and satisfaction. Looking ahead, we are focused on timely implementation of a project which will augment step-up growth coupled with maturing of our recently launched centers. Further, expansion of the B2C businesses. With all these initiatives underway, we are confident that Krsnaa is well positioned to meet its annual targets and remain one of the fastest growing diagnostic chains in India. I will now hand over the call to Mr. Pawan Daga, our Chief Financial Officer, to discuss the financial performance.
Thank you, Yash. Very good afternoon to all the attendees. I will present a financial highlight for the second quarter and half year ended September 2022. In the second quarter, the company registered total revenue from operation of rupees 123 crores, an increase of 13.6% on a year-on-year basis from rupees 108 crores and 8.9% on basis from rupees 113 crores in Q1 FY23. The growth is led by our core business comprising of radiology and pathology, which registered revenue growth of 18.7% year-on-year and 8.9% on a sequential basis. The COVID revenue declined by 94% from rupees 5 crore in Q2 FY22 to rupees 0.3 crore in Q2 FY23. Operating EBITDA for the quarter stood at rupees 31 crores, an increase of 9.5% compared to the previous quarter. EBITDA margin were 25.2% in Q2 FY23. In spite of a new center being launched, the profitability margin remains stable quarter on quarter. The margin are expected to improve in the upcoming quarter with the maturity of this newly launched centers. Profit after tax for Q2 FY23 was rupees 15 crore, an increase of 22.4% on year-on-year basis from rupees 13 crore and 7.7% on a sequential basis from rupees 14 crore in Q1 FY23. For the quarter, PAT margin were 12.5%. In the half year, the company registered total revenue from operation of rupees 236 crore. Our core business comprising of radiology and pathology, which registered revenue of rupees 235 crore, a growth of 14.7% year-on-year basis. The COVID revenue declined by 98% from 35 crore in H1 FY22 to rupees 0.6 crore in H1 FY23. Operating EBITDA for H1 FY23 stood at rupees 59 crore with a margin of 25.1% from the quarter. And profit after tax for H1 FY23 stood at rupees 30 crore with a margin of 12.5% for the quarter. We can now open the floor for question and answer session.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Avnish Khara from VT Capital. Please go ahead.
Hello, am I audible?
Yes, you are.
So my first question is on the Rajasthan tender. So there was a very large tender over there, right? So what exactly happened over there? Can you just shed some light on that?
सर वो टेंडर क्या हुआ, 4 पार्टिसिपेंट थे जिसमें एक पार्टिसिपेंट ब्लैकलिस्टेड था, एक पार्टिसिपेंट कोविड के टाइम पे कुछ सप्लाई कर रहा था राजस्थान गवर्नमेंट में, तो उससे जिसको कंसेशन दिया था वो ब्लैकलिस्टेड था, इसके लिए वो उड़ गया। इसके बाद जो थर्ड पार्टी थी उनको बाद में मालूम पड़ा कि टेंडर इतना बड़ा है तो उन्होंने उसको विड्रॉ कर लिया। तो 3 पार्टियां उड़ने के बाद एक सिंगल पार्टी था, तो सिंगल पार्टी टेंडर ओपन नहीं होता है। तो गवर्नमेंट क्या करती है उस सिचुएशन में टेंडर को वापस रिटेंडर करती है। अगर रिटेंडर सिंगल पार्टी आई तो फिर टेंडर ओपन करते हैं। तो आई थिंक तो कल या परसों नया टेंडर अपलोड होगा, फिर उस टेंडर में कितने बिडर आते देखेंगे और टेंडर ओपन होगा। मेरे हिसाब से 15 दिसंबर तक ये नया टेंडर होके ओपन हो जाएगा।
So 15 December the tender will be open, and then are we expecting a lot of competition here according to you?
अभी के टेंडर में क्या हुआ था कि हम लोग अकेले ही उसमें पास हो गए थे भी सारे डॉक्यूमेंटेशन और कमर्शियल जो भी कुछ था हमारा उसमें हम लोग L1 हो रहे थे, बट सिंगल पार्टी टेंडर हो नहीं सकता। तो इसके लिए गवर्नमेंट ने टेंडर कैंसिल किया और नया टेंडर अभी यानी कि वापस फिर से टेंडर आज या कल अपलोड करेंगे। मैक्सिमम 12 तारीख तक अपलोड करेंगे और 12 तारीख को हो गया तो वापस 15 डेज फॉर वो तुम्हारा क्या बोलते उसको प्रीबिड मीटिंग और उसके बाद टेंडर, तो 1 महीना चलता है। तो 15 दिसंबर तक टेंडर कंप्लीट हो जाएगा।
So this will have visibility on this by Q4, correct? Also, if I look at your revenue line item in the PL, sorry, not the revenue, the fees to hospital, it's in absolute amount it is down quarter on quarter. So what is the reason for that?
Yeah, the reason why the fees to the hospital is down because that is linked to the Rajasthan earlier project that we were working on. Since the project has now been stopped from August onwards, that is why you see a decline in the revenue or the fees to the hospital paid as well.
Okay, got it. And your receivables days, they were at 47 in FY22, and for the first half they've gone up significantly. So is that something that we've seen over the years, that the second half is relatively better?
Yes. So, as we've shown in the presentation as well, basically, if you see from a government receivables, there is a certain level of seasonality wherein Q2, Q3 is where, the receivables get stretched. But we always, like we've been communicating, we try to keep it within 90 days. And even for this half year, or, you will see that we have kept it about around 86 odd days. And as it comes to the year end, and the government is also, or the authorities are also, basically they have to pay the dues because their next year budgets get impacted. So we are confident and hopeful to see, it's coming down to the similar number receivable days that we saw during the March year end. So these are seasonal. This has been a regular pattern. If you see the year-on-year, similar trends. In fact, this quarter has been better than compared to all the previous trends that we have seen and witnessed.
All right. I'll get back in the queue. Thank you.
Sure. Thank you.
Thank you. Our next question is from the line of Aditya Khemka from InCred PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, in the balance sheet, I am just noticing there is this line item called Other Financial Assets, 118 crores in H1 FY23, which was a negligible number last year. Could you throw some light as to what this other financial asset is?
So basically, the other financial assets includes the fixed deposit of a long-term tenure, more than 1 year.
Okay, so you are yet to execute the tender, so you have to put a fixed deposit with the government. Is that what it is?
So some fixed deposits are of our internal accruals, and partially some fixed deposits of IT also, which we are utilizing the funds for our projects, upcoming projects, and the project earmarked for an IPO.
Okay, but I'm slightly confused as to why that would be classified as other financial asset. Generally, wouldn't fixed deposit, etc., come under bank balance or cash and cash equivalent? Normally, we don't do it that way, is it?
Yeah, so tenure of a fixed deposit is more than 1 year. Will be classified as
which is right. Got it. Now I understand. Thank you so much for that. And sir, secondly, on the Rajasthan tender, so as you said, there was only one proper bidder, and therefore the government will need to reopen the tender to see if there are other parties that express interest. Just try and walk us through what is the total size of the tender. Even if the government is willing to give you the entire tender, does your balance sheet and funding allow you to execute a tender as big as Rajasthan's tender?
Yeah. So basically, the Rajasthan tender, if you see, it's one of the tenders which has almost a large network of hub and spoke model, almost 3,000 collection centers, and bigger share of labs. So the government is also keen to have serious players, and that is the reason why, when they invited bidders to court, they saw certain bidders with certain terms which are not qualified, and hence they cancelled the tender, which they will come up again. So of course this is a good opportunity. I think in the terms of just top line, it could be revenue-wise contribution. It could be in the range of about 150 to 200 crores, which for a mature level of this project can be expected.
Right. And as a company, let's say if we win the majority of the tender, let's say we get the L1 in the tender, what is the capital outlay that we'll have to put?
So the capital outlay again will be subjected to what is the requirement that the government is putting up, how many labs they want to establish. But unlike our radiology tenders, since pathology requires, it's a likely asset-light model. So I don't think so there will be significant investment required for this kind of a tender. But the actual outlay will only be we can comment once we see what are the tender requirements, and accordingly we'll then update.
Understood. So basically, if I understand this correctly, majority of your Rajasthan tender is for pathology, it's not for radiology.
Yes, it is for pathology, correct.
Okay. And sir, lastly, just one request. I was looking at the presentation that you guys upload. It's very, very informative. But there are certain operating metrics like average revenue per patient, and then total number of patients, which you give in slides 37, 38 on your deck. So these numbers are given only up to FY22 and not for first half of FY23. So, just from a good practice standpoint, it would be very appreciated if the company would add, first half and quarterly numbers to these operating metrics like number of patients, average revenue per patient, et cetera, et cetera. All these operating metrics.
Yeah, we take your suggestions. I think we'll try to implement on that, and accordingly ensure that the presentation has all these elements covered.
Right. So just for now, because I don't have that data with me, do you have the number ready with you as to what is the average revenue per patient in first half FY23, and also what is the revenue from telereporting patients in first half of FY23?
Whilst I don't have the numbers, on the top of my head, but the numbers in terms of the realization have been in line. So, in fact, both the telereporting revenue per patient have also improved, and as well as the average revenue per patient. But I know we can provide the data to you separately after this call. Pawan, you can just take a note of this, please.
Sure.
Yeah, and as I said, it would be great if you guys just add the quarterly data along with the annual data. That would be fantastic. Thank you so much for taking my question, sir, and I wish you all the best.
Thank you so much.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for taking my question.
Hello.
Nitin, you're audible.
Hello. Is it better now?
Yeah.
So, my question is on if you look at the QOQ revenue growth, we're looking at about a 10 crore delta. Not looking at YOY, looking at QOQ revenue growth, where COVID was a small component of business. Now, in the presentation, we've talked about that a lot of our Punjab contracts has got operationalized, over the last 6 odd months. So, why is the impact? Is there impact of the Punjab revenues, Punjab Punjab project operation already reflected in the numbers? And if it is not, by when will it start to reflect through?
So Punjab has already started contributing revenues to the overall business. In this quarter, we've seen about 10 crores of revenue coming from the Punjab project, which has been increasing steadily. And I think now with these centers getting live, more and more contribution will be seen from the Punjab project as well.
So, what is so for example, the 10 crore that we've done in this quarter? What percentage of the peak potential of the Punjab contract will it represent?
As of now, I think it will just be about close to 15%. There's a significant opportunity, as the centers get live, and the true potential of Punjab, like we've been maintaining earlier as well, I think it is yet to be tapped into. So there's significant opportunity to grow Punjab, and it has been ramping up month on month, quarter on quarter, as we're seeing the trends now.
But from your past experience, typically it will take another couple of quarters before it starts to meaningfully scale up. When the project gets meaningfully.
Yes, from Q4 onwards, we will see Punjab improving the contribution. As you said, Punjab, compared to all our past experience in terms of deploying these centers and the projects, Punjab had its own share of challenges, in terms of regulatory approvals, along with the change of government, which is what resulted into a bit slow ramp up compared to all our past experience. Having said that, now with the centers getting operationalized, we are also pushing the pedal and all our energy and resources to ensure that the ramp up happens and we are able to start getting contribution from the Punjab project.
And yes, when we sort of think about our business from here on, so obviously Punjab project is going to scale up. What are the other projects which you've already won that will meaningfully contribute from here over the next few quarters?
So along with Punjab, we have Himachal, the pathology project, which we have, again, which has been implemented. 10 labs have been implemented. Along with that, we had Mumbai region, wherein we had some centers, in the Mumbai region, which are coming up. So these are the centers which we believe in as they start maturing, they will start contributing to these existing revenue base that we have. Along with, then there are some new projects which are currently in the pipeline, including, Delhi, we have won a project, then Tripura, the telereporting. So these are additional projects that we won, which will also continue to add to the existing revenue base.
Okay. And if I were to put the last one, so of the contract that we already won, right? Mm-hmm. If you were to assess like the peak quarterly revenue potential of these contracts, what kind of a number can we, in a ballpark basis, be looking at? Say maybe in a year and a half, by when all of these contracts that you've won begin to get close to start to get at optimal levels?
So all these contracts put together with Punjab, Himachal, I think on a mature annualized basis, like we said, it should be close to 100 crores annualized revenue.
Each of these?
No, all put together. So Punjab, Himachal, and Maharashtra, if you take all of these, they would be in the range of about 100 odd crores.
Annualized?
Yes, annualized.
So 25 crores a quarter?
Yes.
Okay. That seems a little low, but that's fine. Thank you.
Yeah.
Thank you. The next question is from the line of Shashwat Desai from Samiksha Capital. Please go ahead. Sorry, Shashwat, the line is, your audio is breaking. Not able to hear you clearly.
Am I audible now?
Yes, better now.
So, as I see, margins are affected by two things. One is employee expense, which is rising from last year quarter two. It has been steadily rising as a percentage of revenue. Secondly, other expenses, a major part of other expenses is reporting charges. So these two expenses have risen a lot. So what's the reason for that?
Yes. So I think that's a good observation. Basically, the reason for rising manpower costs is linked to the projects of Punjab and Himachal Pradesh, where significant resources have been deployed. Just to give you a perspective, there are 25 CT scans, 6 MRIs, number of labs coming up equally in Himachal Pradesh. So we have deployed manpower. So whilst the manpower has been added, however, the revenue has not been commensurate to the extent of the manpower because it's a ramp up which is currently going on. So I think beyond this, there won't be a significant addition to the manpower once the projects are now operationalized. And as the revenue starts increasing, you will see these costs getting stabilized. Or probably they will come back to the standard levels that we expect as a percentage of manpower to the revenues. With regards to the reporting charges, again here in Punjab, we have to appoint radiologists at each of these centers. And that is the reason why, because the volumes are low and we are not totally able to leverage the telereporting. That is why the doctor's cost or reporting costs are high. But we are working where the other volumes could also be done to these doctors, as a result of which you'll see the doctors or the reporting charges also coming down as the volumes go up in the subsequent quarters.
Okay. Secondly, as per my understanding, earlier Punjab was a 100 crore project and rest of all are 100 crore projects. So why now Punjab, Himachal and Maharashtra, these three contributing only 100 crore? Punjab was contributing 100 crore earlier.
Correct. So the reason is, as we are seeing today, there have been these deployment challenges that we see. Whilst on an annualized revenue basis, we would certainly have higher aspirations. But given that we are seeing, we just want to calibrate, and see how we take it. Aspiration-wise or from a opportunity-wise, of course, they will be providing much higher value what we do. But currently, the way these state-level different dynamics are working out, we just want to be cautious in terms of the approach, and of course, come back with a much more updated probably by Q3 once all the centers get operationalized. Like some of the centers we are seeing, there are some operation challenges, like in the border areas, electricity is not getting supplied. So we just want to get the centers operationalized, and then we'll come with probably a more guidance in terms of how these projects will contribute to the revenues.
Okay, sure. And with these figures, are we in line to match a target of 25% growth this year, which is 300 crore in the next half of the year?
Sorry, could you repeat that question?
So we have the operational challenges, right? So are we in line to make a 25% growth this year, which is around 300 crore in the next half of the year?
So I think if you see from guidance wise, we are working towards it, where we will be able to working towards to achieving that target of having 20-25% growth. As these projects get ramped up, we are confident we should be able to achieve it.
Okay, thank you. And just one request, as earlier participant mentioned, volume data is missing. So if you can provide volume and operational data, it would be helpful. Thank you.
Certainly, yeah.
Thank you. The next question is from the line of Chenil Shah from JM Financial. Please go ahead.
Thank you for the opportunity. My question is on the gross margin. There has been some impact on the gross margin this quarter. So If you can throw some color on, is it the mix or what is it? Is it temporary, and how should we look at it going forward?
Yeah. Pawan, would you want to take that question?
Yeah, sure. So the gross margin, slightly impacted because of the low volume in the new and operationalized center, where we see a consumption cost is at a higher side, and this is the reason only where we see impact on the gross margin. But going forward, we will see the improvement in the gross margin as well as the stability in the gross margin.
Okay. Yash, on the if you look at the growth, ex of our Punjab contracts, it's just like around 4%, 3-4%. So, what is impacting this growth in the base business, and how should we even look at lumpiness, in a quarter over quarter? So, like 2Q is supposed to be a very good quarter, and we still have muted growth. So, how should we look at it?
So I think from a overall business perspective, as we said, our today the entire energy and focus is on ramping up the projects of Punjab. These are large projects which we want to get off live so that they get stabilized. Hence, there has been slight. The entire team is working on it. But I think as Punjab and Himachal get operationalized, we will be focusing back on our existing centers which are running on its own steam, and they should also start contributing more and more to the business. So I think quarter-wise, Q3, Q4 onwards, we'll have some more, perspective to share in terms of how the quarterly numbers will look like once all these projects get operationalized.
And are we still firm on our FY24 guidance? Because, and if you can just refresh, so our RHP tenders, as you mentioned, will contribute around 100 odd crores. And Maharashtra, if I'm not wrong, last quarter you mentioned 65-70 crores, and other tenders would contribute 100 crores. Is that understanding correct?
Yes.
So, and base business, we are not seeing much traction. So then would that mean that, we are, would be lowering our guidance a bit, or maybe this could get delayed by like 6 months or so?
Correct. So I think from a guidance perspective, we are equally, and very aggressively working on achieving the target that we had set out for ourselves. The only challenge that we are seeing is in terms of certain delays, and I think that is why we would want to, calibrate and come back. I think from our perspective, given that, various of these even projects that are currently under implementation, we believe that, hopefully by end of next quarter, we'll have some more realistic guidance to provide, which basically, though we are committed to achieving those targets of, doubling profit as well as in terms of the revenue that we had mentioned in the previous quarter. So we are working aggressively towards it. And if you see the projects that we have on hand, some of these projects like large projects which include Maharashtra, then Himachal Pradesh, the entire state. So I think that gives us confidence that we will be able to achieve those targets.
Sure, that's helpful. And one last question, if I may please squeeze in. What's your exact plan on the B2C front? So we are going to operationalize around 600, roll out 600 centers. So what is the timeline for that, and how much contribution are we really expecting?
Yeah. So for our B2C segment, though we are late in the sense from a market perspective, but what we've done is we've studied what are the current trends and come up with a unique model which benefits the so-called business associate. And having tasted initial successes, as of date, we have almost close to 100 such touch points, including Maharashtra, where we have these what we call as Krsnaa business associates and the B2B touch points. And we are planning to do in a phased manner. So we are launching this in Punjab very soon. I think the team is working on where they will be signing such agreements very soon. Having said that, but initially it will be a bit slow ramp up because we really want to ensure that the model that we are coming into, the market is strong enough, stable enough, and then there will be a steep hype in terms of just, basically replicating and scaling the model. So we are expecting by end of Q4, there will be a gradual growth in terms of the numbers. And then from the next fiscal year, as once all the systems, the integration, everything gets aligned, we should start seeing a spike in terms of getting this traction in terms of having more touch points and numbers getting added quarter on quarter. From a revenue-wise also, I think we are seeing some good contribution coming up, with about these 20-odd centers contributing to almost 20 lakh rupees from the initial month itself. So we are seeing that, as these centers start maturing, they'll also further add to the revenue base.
Sure, that's helpful. I mean, if I have any other questions, I'll get back in the queue. Thank you.
Sure.
Thank you. Our next question is from the line of Rishabh Tiwari from Allegro Capital Advisors. Please go ahead.
Yeah. Hi, thanks for the opportunity. My question is regarding the material cost. So the material cost has gone up from 10.5% to 14% this quarter. And may I know, just wanted to know the reason of such a significant increase. And a related question is it related to change in the business mix, as in the revenue mix of radiology, pathology, and telereporting? If you could please, if you have the numbers at the top of the mind.
Yeah, I think one of the key reasons for increase in the consumable cost is, of course, because of the pathology business rising. There again, because as in the ramp up, there are a lot of controls and calibrations to be done, which requires in the initial phase these testing have to be carried out, which adds to the consumption cost. As the volumes increase, you'll see the consumption cost coming down and gradually stabilizing at the levels that we are used to. It's just a matter of the ramp up currently going on, where machines have to be tested, calibrated periodically to process as the volumes start kicking in.
Do you have the number, round figure number, at least ballpark? What is the pathology revenue mix contribution this quarter? Last quarter it was 38%. Has there been significant increase?
I don't have the number with me. Pawan, maybe you will to answer this question.
Yeah, this is pathology contribution is 32% in this quarter.
Okay, and the telereporting or radiology?
Telereporting in the range of 10% only.
Okay.
Contributed by the radiology side.
Okay, that helps. Thanks.
Thank you. Next question is from the line of Bhavin Shah from Samiksha Capital. Please go ahead.
Yeah, my question is answered. Thanks.
Thank you. Next question is from the line of Ranudeep Singh from Mass Capital. Please go ahead.
Yeah, thank you for the opportunity. Can you share some thoughts about the retail game plan, especially with respect to the franchising models, and what kind of EBITDA margins can we expect? Will it be marginally different from what we have been clocking in our PPP centers?
So the franchising model that we have conceptualized, as I said, we both from a pricing perspective, it's an aggressive pricing compared to the market. Our rates are highly competitive, and yet at the same time, given that there's no significant investment to be made by Krsnaa, so most of the investment will be done by the franchise again, which is not a significant investment for them. The rest of the support comes from Krsnaa in terms of branding, collateral, and the system. With all these inputs, I think from a margin perspective, they will be having the same margin that we see from a center, which will be in the range of about 40% EBITDA margins is what we're expecting from these franchisee centers or the collection centers.
Okay, good to hear that. My second question, any specific reason in terms of choosing the B2C foray, especially with the 5 states that you have mentioned in phase 1 and phase 2? Would love to understand your thought process, especially why not we are opting for Tamil Nadu and Kerala, which has the highest share of elderly citizens as per the Elderly India 2021 report. So your thoughts on that?
Yeah. So, if you see, currently Krsnaa has a larger footprint on the PPP side, and what we try to do is we already have our network of CT scan, MRI, and pathology centers in the states like Maharashtra, Himachal Pradesh, as well as Punjab. So the thought process was that since we have a network of these centers, and by establishing these franchisee centers in these states, we will be able to leverage the network in a much more impactful manner, wherein patients, those who are not within near the centers, but their samples could be collected and processed at the nearest lab that we already have, and at the same time even get patients who are coming for pathology, maybe even also, if they need radiology services, they can be directed to our centers. So this is why we chose these existing states where we have a good footprint or network of centers and trying to leverage them. Of course, as the model starts expanding, then we could look into other states where there is a need. But as of now, given that we want to have a very impactful and thoughtful process in terms of building this network, we thought of leveraging our existing footprints in these states and then launching the B2C network.
All right, fair enough. And if I may just ask one sub question that I had, any update did we get on the tax issue that had come back like a couple of months back?
Yes. So on the taxation, like we communicated as well in the earnings report, we are currently, cooperating with the authorities. I think significant part of the, in terms of the documentation or information that they requested has been provided. We are also equally waiting to see, the outcome of their assessment, and we shall keep, all the stakeholders informed about as and when we get any such kind of information from the authorities. As of now, no demand or claim has been made on the company by the income tax authorities.
All right. Thank you so much for answering all the questions, and wish you good luck for the next quarters.
Thank you.
Thank you. The next question is from the line of Yogansh Jeswani from Mithil Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. Just one question on your basically the model in terms of, I think in some states we have a restriction on marketing and reaching out to customers. So, given our model, how will we then grow if we are not able to market and reach out to customers?
So there is. Sorry, sir, go ahead.
Just one more point that I would like to add to this. So I think Punjab is one such state wherein we have a restriction on reaching out to customers. And today in the conversation mentioned that the B2C segment we will start with states like Punjab, HP, and Maharashtra. So with such conditions, how do we then leverage the B2C business without marketing?
Basically, there is no such restriction in terms of marketing our efforts. I think what the government tenders normally stipulate is that if there's a government patient, you need to give them due service, what is stipulated in the tenders. Government doesn't discriminate between a private patient and a government patient, but because these are under the PPP, they expect that, especially for those people who don't have access, or the poor people and people from low income families, they get the due treatment and service. In fact, all the states where we are present, we have equal share of people coming from the government patients as well as private walk-ins. So I don't think so there's any restriction for us to leverage. In fact, the government is more happy if more and more people avail these services, because that is what they intend to create access to quality and affordable healthcare to the masses.
Okay. So, sir, I was under the impression, or at least my understanding was that in a couple of states, we are not allowed to put out banners or hoardings or such things, about our Krsnaa Diagnostics for getting the outside patients, outside the hospitals. So is that understanding wrong, sir?
Yeah, we are allowed. So even if you see Punjab, like you mentioned, Punjab, we have huge hoardings that are being put out outside our centers. Otherwise, how would people know that government has launched such schemes and such initiatives? In fact, if I give you an example, like Himachal Pradesh, government is saying that they want to do a joint campaign with us to promote these services, so that more and more people get to know that such services are being made available for the masses.
Okay. So, sir, currently, say for example, if I have to talk about Himachal and Punjab, how much of your footfall is coming in from outside customers and how much is it from the within the government hospitals?
So currently, if you see,
rough breakup would be helpful.
Sorry?
I'm saying if you don't have the exact number, even a rough ballpark figure would be helpful.
Yeah. So currently, if you see today in Punjab and Himachal, we almost have to the extent of 50% of government patients and 50% of private walk-ins.
Okay. Got it, sir. I'll get back in.
So, like the Punjab, our rates are highly disruptive. So we have more and more patients coming as they know that these are the services. They come and avail these services. And likewise, the same trend is being seen in Himachal Pradesh as well.
Understood. Just one question I missed out asking. If we look at your slide in terms of average revenue per patient, so I think we are back to 975 that was seen in 2020. Going forward, do we expect some growth coming in from higher, average revenue size, or will it just be more centers and volume growth? Given the kind of tenders that you have won, do you see this number also increasing? And if yes, by how much?
So the average revenue that you see currently, these are at the stable levels. I mean, if you see on a half-year comparison of the previous year, there was a combination of a lot of COVID tests which are highly priced. But these are the stable level of average revenue that we expect. There won't be a significant jump in this case unless there's a new tender which is won at a differentiated prices. So I think these are the stable revenues that we expect to continue going forward. However, as and when the mix of, let's say, patient or the test menu changes, there might be some impact, but, I'm sure it will not go down, but it will be stable or at least continue to grow. Also coupled with the fact that there are certain price escalations embedded into our contracts, so they might also, have an impact in the realization going upwards from the base that we have today.
Understood. That's it. Thank you.
Thank you. The next question is from the line of Cinderella Carvalho from JM Financial. Please go ahead.
Thanks for the opportunity. Yash, we just wanted to understand from the base business perspective, if we see for this quarter, the sluggishness that we are seeing, is it volume-led or is it realization-led? You mentioned, as we will come back to concentrate on the existing centers, we should ramp up. But I want to understand from the volume aspect or from the realization aspect?
It's more from the volume side. As I said, with the centers getting deployed and delayed, so the kind of footfall that we expected in terms of ramp up, that has not been achieved. Once they start achieving, you'll see the trend. I think if I give you the parallel analogy or example of Himachal Pradesh, we started somewhere in September and we've already seen a revenue run rate of almost 2 crores per month in the first 2 months itself. So unlike all the other states, Punjab has been a bit impacted because of delay. So now the centers getting operationalized and government also trying getting an understanding of how the PPP model works, especially the new government. We should see that these volumes coming back to the expected levels, and therefore they should be contributing to the overall revenues.
I understand that. I'm trying to understand the existing centers, not from the new centers or the upcoming centers which we are just commissioning.
Even for the, for example, even in the existing centers of Punjab, the ramp up that we expected, Punjab, there is largely all cash-driven patients. Right? So now, as more and more awareness is being created that they are getting these prices, in fact, a lot of other people are doing marketing without us. Like, there are certain NGOs, they have got to know, so they are spreading the word about. So as these centers, their visibility gets started across the various, communities, we'll see traction coming on the existing centers. Even Punjab, which was like 4 crores of revenue in the Q1 has ramped up to almost 11 crores in Q2, which is almost, doubling of the revenue. So these are the trends which you are seeing. As I said, as the centers and they get stabilized, we'll see more jump coming up from these existing centers as well.
And how about Maharashtra?
Maharashtra for the new project or for the existing centers?
Both, if you could, in your term, right?
Sorry?
On both sides, existing as well as new, in Maharashtra.
So, existing centers, I think for the most mature centers, like, which are our old centers, they are, in fact, some of the centers have also shown good growth, almost in double digits. The new centers like Mumbai and the municipal corporation centers, as I said, once the initial there is a bit of lag as the center gets operationalized, people start knowing about it, and then after a couple of months, the spike starts being seen because these awareness is being created about the centers, the prices, the quality of services, and then seeing an uptick in the businesses as well. On the new Maharashtra tender, I think the project that will get operationalized only in next year. It's a large project. So, and there's a lot of late possession to be taken over, and the learnings from Punjab we are applying for Maharashtra as well. So, Maharashtra new tender will be operationalized only in the next year.
Thank you so much. And in terms of EBITDA margins, you highlighted that it is stabilizing right now. So for this remaining second half also, we should expect EBITDA margins around 25, and as the ramp-up happens and newer centers mature from FY 2025 onwards, we should be expecting the earlier EBITDA margins of closer to 20-29%. Is that the way to go?
Yeah. So like I mentioned, if you see in the quarter one, the EBITDA margins were a bit impacted because of the cost of operations and revenues not being commensurate. But as the revenue starts stabilizing and they'll further improve, we also expect a further improvement in the margins, and hovering around the same 27-28% is what we expect in the subsequent quarters.
Thank you so much. That's it from me.
Thank you.
Thank you. The next question is from the line of Aditya from Securities Investment Management. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. I just needed one clarification. I believe that our revenue from our Punjab contracts used to come from our subsidiaries. So when I look at the difference between a standalone and consolidated revenue, so it comes to around 2 crores. But we are seeing that we got around 10 to 11 crores from a Punjab contract. So where's the disconnect here?
Could you just repeat the question?
Yeah. Earlier we used to say that the revenue from a Punjab contract seems to come from a subsidiaries. But when I look at the difference between a consolidated and standalone revenue, it is around 2 crores. And we just said that we got around 10 to 11 crores. So what's the disconnect over here?
So, Pawan, maybe you can answer that question.
Yeah. So basically, at a console level, the revenue between the subsidiaries and the holding company get knocked off. So the assets were deployed by the Krsnaa Diagnostics Limited, parent company. So we have an internal arm's length transaction with the subsidiaries where we share a revenue because the assets were deployed by the holding company. So that's why this gap is arising, and the sharing which holding company is getting, which is added in the top line of the standalone number. That's why this gap is arising.
Just to add, these are 100% subsidiaries created only for the Punjab project, which was a requirement of the tender, where the government wanted us to have, the subsidiaries or special purpose vehicles created, 100% owned of the company. And so this is just an arrangement, where basically, since the holding company has invested the asset, there's a revenue that comes back to the holding company. But I think from all perspectives, the consolidation level, wherein these are all Krsnaa centers and owned and managed by Krsnaa, that is how we see it.
Sure. Thank you.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference back to the management for their closing comments. Thank you, and over to you.
Sure. Thank you, everyone. Thank you for your time and for attending this conference call. Thank you very much.
Thank you very
much. We hope we've
much.
answered all your questions, and if any questions remain unanswered, please feel free to connect with us or our investor relationship team at Churchgate Partners. Looking forward to interacting with you in the future. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Equirus Securities, that concludes today's call. Thank you all for joining us, and you may now disconnect your